All right, everyone. Thank you for joining us on our May webinar. Today we have invited Mr. Dylan Fielding, formerly the Economic Development Director at Carbon County, and also formerly, I guess most recently, I should say, the Director of the Office of Rural Development here at the Governor's Office of Economic Development. We will be talking about the Targeted Business Tax Credit Incentive. I went over it briefly last month during our webinar, and we decided to invite those who this program would apply to and go a little bit more in depth when it comes to the program. Have you ask questions to Dylan and things like that. So if we can get started, I'll turn the time over to Dylan, and we can go from there.
Dan, this is Wes. Let the record show that we are all standing at attention and saluting Mr. Fielding.
At ease, everyone, please.
They're here.
This doesn't work.
Well, it's good to be among you, you people. What can I say?
DVD player that's not pressed.
Also, if I can have everyone mute their microphones, if you can mute your microphone, we can get a bit clearer sound.
Oh, Captain Mike Malcolm, how are you?
Want to let them know we're here?
They know.
Remember, this is being recorded for posterity, so let's maintain some civility. Before I begin, if you could text or in the chat box, if you could put any questions that come up that are real questions, as we're going along, I'll try to address them as we're going over it. Okay, we're going to talk about the Targeted Business Tax Credit Incentive. Wes Curtis knows the history of this. This was one of the first pieces of legislation that I was involved with in moving forward, and frankly, it's been a good incentive. It is specifically designed for smaller rural counties. So some of the larger ones it isn't going to be applicable to. The critical thing about it is that it is refundable tax credit as opposed to just a regular tax credit. The problem with little businesses is sometimes they don't have much of a tax liability, and consequently they can get their taxes reduced, but it doesn't do much beyond that. This is a refundable tax credit, which means they get cash. They send in a form. Dan sends out the form to the business. They send that in with their Utah tax return, and the funds are sent back to them as a tax return. If they have paid zero taxes, they still can receive the award in a tax refund. So that's what the refundable tax credit means. It really provides a real yearly cash incentive. This generally is spread over 3 years. The award spreads over 3 years, cash 3 years. Next, the counties that are applicable are those under 25,000 in population. This is a list of those counties that are applicable.
Everybody, please mute your connection.
Okay. Again, counties under 25,000 in population. This is a current population estimate of those counties that this is applicable. That's the first qualification. Next, the next qualification. Hello, Dan. Dan?
Yes. Yeah, I'm here.
Moving on to the next slide. There you go. The second qualification is that in the last year,
Those on my file can't get them out.
Individual months have to have unemployment of 1% or greater than the state average for that respective month. Down to those counties that aren't doing so well. The information is taken from DWS. It uses the monthly non-seasonally adjusted unemployment rates, and again they have to be 1% or higher than the state average for that particular month. For 2015, those counties that qualified were Carbon, Duchesne, Emery, Garfield, Paiute, San Juan, and Wayne counties. Now, because of the lateness of the season here, this is should be typically done in January or February, the qualifications determined. Dan told me that we could include excuse me, the first quarter of 2016. When we include the first quarter of 2016, it adds Daggett, which then had 8 months out of the 15 available for unemployment 1% or higher, Grand, which had 9 months, Kane, which had 8, and Sevier, which had 6 out of the 15. So apparently Dan says that we can use these additional 4 counties qualify. I'm sorry, but if your name is not on the list, you're just plain SOL. So, next slide. Hello, Dan. Thank you. Now, another thing about this incentive is that the awards are competitive. There is $300,000 in the law that is awarded each year. It can be awarded each year. And it's done on a competitive basis. The companies submit their application from one of those counties that we just went over. The businesses submit their application. It's a very simple application. Won't take more than an hour to fill it out and to put the information down. And then those applications are ranked by the economic impact of the application, the economic impact to the county for that the business is proposing. It starts at the largest economic impact, the one that has the highest economic impact, and then goes downward from there until the funds are used up. The economic impact is measured by over 3 years over the following in the following thing: the number of employees, the full-time equivalent number of employees, the wages being paid, and the amount of building and long-term equipment. So what it boils down to is the company says, okay, next 3 years, I'm going to have a project here. I'm going to, for example, add on to my business, and because I'm getting a bigger building and I'm buying this special piece of equipment, maybe a CNC route or machine, then I'm going to have to hire certain number of people to handle this, and I'm going to pay them this much wages. That project can be spread over 3 years, and then the economic impact over those 3 years is ranked and then decided. So let's move on to the next one. I'll give you some examples. Historically, the incentive was awarded $50,000 the first year, $25,000 the second year, and third years for a maximum of $100,000. Now, depending on the economic impact, the number of applications, the nature of the businesses, and all of this is unknown until the applications actually come in, the executive committee of the GRPB, the Governor's Rural Partnership Board, can adjust the amount of the awards. Frankly, over the history of this incentive, there have been several times, several years, where there was only 1, 2, or 3 applications even submitted, even though there were about 5, 6, 7 counties that this was available to. There just simply wasn't that many applications. So this $50,000 the first year, and remember, that is $50,000 of cash and in a refundable tax payment to the business, and then $25,000 and $25,000. Now, the thing that balances this out is if the business say they're going to hire so much and pay so much and build so much, obviously the more they say they're going to build, the higher the impact. The more they're going to hire, the higher the wages are, the greater the impact. The caveat is if they are $1 short in any of those 3 categories, then they get 0. So they could be awarded the $50,000, 25, 25, but if they're $1 short, they get nothing. That's what has to balance. That's what causes the balance and to make the application realistic, if you will. Next slide. Let's go over a couple of examples of that. Oh, I just repeated myself there. Okay, yeah, the documentation. Once the award is made, the proposal for the number of employees, the wages, the amount of plant and equipment, that is set in stone and it cannot be changed. And at the end of the year, the calendar year, documentation for those proposed goals is provided to the county economic development person and GOED. Okay, so they provide documentation that they hired these many people, that this is what they paid them, and that here's some paid building and invoices for equipment or whatever. Okay, next slide. And yes, Dan puts a question in there. That is $0 for that particular year. So let's go over this. Here's an application, let's say. Year 1, they're going to hire 2 people. Year 2, 3 people, and year 4, 4 people. In additional wages, the first year, they're going to have $100,000 of additional wages. The second year, $150,000, and the third year, $210,000 additional wages. So they're paying them roughly $50,000 a year. And then they're going to say build a building or buy a piece of equipment for $200,000 the first year, $33,000 the second year, and $10,000 the third year. Now these numbers don't have to be progressive or anything like that. They could it could be any arrangement. Now, the results, so at the end of the first year, they hired 2 people. They had 2 more people, 2 more FTE on their books. Their wages was $99,999. So they were $1 short of the $100,000 of additional wages. And then the building, they built more building, they built more equipment. They had $250,000. Because of the $1 short in wages, and yes, I'm doing this as an extreme example, they got 0 that year. So say they were awarded $50,000, 25, and 25. they would have missed out on that $50,000. Now this comes into the strategy that we'll go over a little bit later, is how you help the company make sure that they get that this award. And the company, they know what the requirements are. So this shouldn't come as a surprise to them, because they have along the way known how much they're spending on wages or building or number of people. Okay, the second year, again, this is the 3-year award. The second year, they made it. They had the number of employees, they had the number of wages, and they had the proposed building and equipment. So they send that information in. You help them put together that information, verify the arithmetic, make sure it's right. You verify it, and then you send that in to Dan. Dan looks at it, and then he fills out a form sent to the business. The business includes that form with their Utah tax return, sends it in, and even if they don't owe $1 of taxes, or they're already getting a refund of $1,500 of Utah taxes, then they would get the $1,500 plus the $25,000 in the award. Well, see, if they'd have done that the first year, maybe they would have paid a little bit extra for the wages for their employees, so that that $99,000 was over the $100,000 that they proposed, and would have received $50,000, more than enough to cover their shortfall. So that's where you work with a company along the way to do it. Now, the third year example, okay, is the building is, they were short on the building. I'm reading the note here from Jake. If someone forfeits their tax credit by inability to reach their target, yes, for that calendar year, can GoEd award that amount to another eligible applicant? The answer to that has been yes, but it carries over to the next year. So say they missed that $50,000, they would have the $50,000 that wasn't awarded, and that would in times past, that is carried over to the next year's $300,000, and so there would be $350,000 that would be available to be awarded that way. Yeah, and if they can't use the awarded amount for the 3 years, if they miss it entirely, then again, those funds are carried over to the next year. That's the way we've done it in the past. Okay. Oh, Linda, Jake is my alias. Okay. All right, next slide. Okay, here's another example. Again, strikingly the same. The first year, the wages was $101,000. There was 2 employees, and they did the building, so they were awarded the $50,000. Second year, they meet the proposal, what they proposed, and they're awarded the $25,000. Third year comes along. Business is a little slower that year, and so they only hired 3 people. They're short the 4 that they proposed. Yes, their wages was more than enough, and yes, their building was more than enough, but they didn't have enough new FTE, so they don't qualify on that 4th year, or that 3rd year. Again, they put the once the proposal is put in, this is the balancing act. Can they realistically meet this goal? And if they can, and depending on how that application ranks with the other applications that have been submitted, then that award is made, it's cast in stone, and they know what their requirements are, you know what the requirements are, and it carries forward from there. Okay, next slide, Dan. What should you do today? First thing you do is think about the companies in your area that are growing or that could grow if they had some extra cash from the state to help them grow. Take the application. The application consists of their name and information, social security number, all that kind of stuff. Year 1, how many employees? Year 2, how many employees? And the same with the salaries. This is new salaries, new employees, and then the proposal of dollar amount of plant and equipment. And then you explain the application to them. It's simple to do. Do they have a project? If they had some extra money that is contracted from the state, so they know they're going to get this amount of cash, that makes a big difference to small businesses, because if they go building a building or buying a piece of equipment, and then if they're going to get $25,000 or $50,000 or whatever the award is to help pay for that equipment, that makes it a whole lot easier to do that. Now the question here is, does the company have to be in business for more than 2 years? That has really never come up before, and that would be up to the executive committee and GOED as to what they want to do. My first impression is, what were they doing before? Is this just a similar business, or is this absolutely a brand new startup that needs to, needs some seasoning? That's, if this is a deviation from a previous business, they have previous business experience, so they show they can probably handle this thing, that would probably be admissible in my estimation. There is not a requirement in the law that it has to be in business for 2 years. Similarly, there does not have to be 110% of county wages is also not included in the law requirement. That might be a good idea for the policy, but that's up to GOED and the executive committee. Frankly, I don't know that would be, my experience in these type of businesses is that simply has never entered in, because the businesses that are doing it, they're generally beyond that 110%. The next question here, let me see, from Brian. When are the applications due? And that's up to GOED. It will be, because of the lateness of the year, I would think that would be a very short time frame, in the next couple, 2 or 3 weeks kind of thing. Now, what if your county qualifies?
We'll also review the rules and see when we can start or stop accepting applications.
Okay, it's generally done in, again, February, March kind of time frame, because of the on the number of, the unemployment requirement. If you don't qualify this year, if you do qualify this year and don't qualify next year, that doesn't enter into it. because the company qualified and is issued a contract saying if they meet these requirements, they're going to get this kind of tax credit, refundable tax credit. And so the county status, once you qualify, does not change the contract that was issued by the state. So that doesn't enter into it.
To say that a little bit differently. So if the county qualifies 1 year, the company applies and is accepted, and then the next year the county does not qualify, the company still qualifies for that tax credit because they had that contract the year before.
Yes, and they have it for, and again, that spreads. Generally, it's been for 3 years. Okay. All right. Next slide, Dan. All right. If the company wins, what do? You meet and go over the procedure and the goals again with the company. Make sure that they understand. You said you were going to hire this many people. We need to see documentation of that. This much salary, this much in plant and equipment. We need documentation of that. And so I would suggest that if they're awarded this, make sure they understand they can look at this, they can track this every month along the way. But in November, review the application with the company. Have they completed it? Where are they short? And if they are short, can they make that shortage up so that they can receive that cash incentive with their tax return? Get the documentation together. You have to prove that, show documentation that they have in fact met their proposal, the paid invoices, building contracts, employee reports, DWS reports, that type of thing. Now they say they're going to hire 3 people, and in fact they hired somebody and then it didn't work out and they had to fire him, and then they hired somebody else to replace him. It's FTE. It isn't the absolute same 3 people. It's the full-time equivalent. You're looking at what the full-time equivalent is so that you're adding jobs to that business and consequently to the county.
Dylan, that's actually the same thing with the fast track. With the fast track, they have 60 days to, if they fire someone or if the person quits, they have 60 days to rehire them in order for that position to still be eligible for the job creation incentive.
Yes. Now, the problem with that is that 60 days, say, because they don't have that salary going out for those 60 days, are they going to be short on their salary requirement? So they've got to, but again, this is something that they have control over and that they can measure along the way. Again, you get the documentation at the end of the year. Come January, you get the documentation. You make sure the arithmetic works. You make sure that it matches what they originally proposed, and you send it in to Dan. Dan looks at it, says, sure enough, you guys know how to add and subtract, and he fills out the form, sends it to the company, and they include it with their income tax submission to the state, and then that refund comes back to them. Are there other questions? Is this clear enough?
Charlie
Dan?
had a question just above my comment there. Are these tax credits retroactive?
By retroactive, do you mean to the first of this year? Historically, yes, because it's a calendar year. Historically, it would be retroactive to the first of 2016. That would have been, but again, we're doing it earlier in the year. If you don't do that, it's going to be difficult to start dividing up years, and because everybody's on a tax, generally on a calendar tax year, makes it a lot easier for the documentation that comes that way. Let's see. Oh, here's the rule. Yeah. Okay, Dan's included the rule there. Again, because it's so late in the year, there may have to be a little extra consideration to get this thing out and going for this year. Let's see if there's another slide, Dan. I don't remember what else. No, okay, go back, Dan, to the counties that qualify. Now come forward one. All right, these are the counties that qualified for 2015, and those that for the first, when we added the first quarter of 2016 into it, those that were added onto that. Now, there's one question that hasn't come up on this, and that is, does tourism kind of businesses qualify? Dylan's biased in this, and for those counties that tourism is a big deal, such as Garfield or Wayne counties, where their industry really is tourism, in my estimation, that should qualify. Tourism has not counted previously in Carbon County, and so these questions, these kind of specific questions, that's the reason it's a good idea that Wes is here and Linda, so that those decisions can be made. Does tourism count for these kinds of businesses? Again, the weakness to having tourism is traditionally their salaries are not as great as, say, more industrial kinds of businesses. So that might be a little bit weak. But let me give you a horror story from Carbon County from 100 years ago, and that is, I had a medical facility, doctor's office, that wanted to expand, and they hired 3 people. We're going to hire 3 people. They're hiring 3 people at $70,000 a year for each of them. Their wages was $210,000 for that upcoming year. Again, because this is competitive, there was a business in a faraway county, and they were hiring 20 to 30 people the first year, and more the second and third year. They paid them minimum wage, frankly. It was just a minimum wage, but the number of people that they hired was far greater than my 3 people. And consequently, when the economic impact of that was weighed in the county that the business was in, I lost out with my $70,000 wages income because of the number of people that were involved. So don't hesitate to submit the application. We do not know until everything is sent in who's going to send things in and what the economic impact of that particular proposal is to the county. So there is, and again, traditionally, there have not been that many applications submitted. And that's unfortunate, because there's an incentive that is real cash that can really help your county and really help the businesses, and it can make a difference for that business. And we can point to several businesses in Carbon County when I was there that are there and bigger and stronger than they were because of that $100,000 over those years. There's not a in fact, there was one business that in fact got two of these awards over, they were obviously spread over the years, but they actually got two of these awards. There's nothing to preclude that, and it was a major factor in helping that business to grow. And they've got 30 people that's working for them now, and they're doing very well. Okay, any other questions? They've all gone to sleep, Dan, including Dan.
Lynn, this is Linda.
Yes, Linda.
I am thinking, of these economic development directors that are online. There may actually be a fast track. If any of you have fast tracks in line that haven't been awarded yet, I wonder if they could benefit from a $100 contract over a $50,000 contract. I wonder if some of those businesses might consider applying. We have such a quick turnaround here, applications coming in, that it'd be great to have some that are ready, and it may be that your fast track people have already pulled enough together to apply for the fast track where they might consider this one over the fast track, especially if they're concerned about wage, that 110%. But even if they're not, this might be a really good tax credit for people. That goes over
There's also mentioned that a company can do both. There's nothing that says that they can't do fast track and the targeted business tax credit.
Those are excellent points. Absolutely. And again, that's your job, to help these businesses get this funding so that they can grow. And again, because you're proving that, there's no money awarded unless you've got documentation that the wages were paid, the building was built, or the equipment was bought, and the wage and the number of people were hired. And so this makes it easy for Linda to go to the legislature and to the naysayers up north and say, this is what this does to the business, and this is a permanent growth, if you will, in that business for years to come. And that's not only, so it's spread over 3 years. So there's a long-term growth factor that's easy for Linda to point to and say, this is how we're helping rural Utah. And helping rural Utah with those counties that particularly need it because of the unemployment rate. Other questions? Comments?
Is there anyone listening today that thinks that they know a business that would be interested in this?
Can you guys hear me?
Yeah, go ahead, Dan.
Well, there were a couple questions here in the chat. Justin Fisher, given that tourism employment is seasonal, how does it affect FTE status?
I think that comes down to definition of FTE.
Yeah.
And how many hours did they work?
Yeah.
And out of the 2,050 hours of a full FTE, how many hours did they work? And so that kind of thing enters into it. I think the executive committee is going to be looking at as one of their weighing of impact that these are full-time through the year kind of FTE, but that isn't to say that your application wouldn't qualify, because again, you don't know what the competition is.
That is true. Brian Raymond asked, are there funds in the, it says Kitty here, but I don't think from the previous years, or is this year's total the 300,000? So is it just 300,000 for this year? Did the totals from previous years roll over?
Linda have to ask the accounting people. I would bet they've probably spent that money, but you'd have to ask your accounting people. But the 300,000 is part of the legislation.
Yeah.
Part of the law.
Dylan, I have a question. Does that money automatically get sent to GoEd? Is it seriously on the books somewhere and we just haven't been using it?
Yes.
Okay, we'll talk to accounting.
Because the law actually, if you get onto the code, it says $300,000. So in my mind, when they're adding up the budget each year, they have to add that 300,000 someplace. Needs to go somewhere.
Well, we'll find out, and we'll let you know. I'm actually curious as to whether they would release funds without an application, even to GoEd. So we'll check on that. It'd be fun if there was a whole pot that that we could work with. We definitely need it, especially in well, in all of these counties that are on your list.
It's been my experience, unfortunately, that there were many years where there were not, see, at $50,000 and you got 300,000, that's 6 companies that could be awarded. There were not 6 applications submitted on numerous years. And again, I don't fully understand that. It's frankly because those counties that are eligible just simply did not find a business to do it. Find somebody that's interested in doing it. It is a little scary when you start talking 3-year commitment. You know, this is what I'm going to do for this project over the next 3 years. That kind of scares a lot of businesses. I don't know what it's going to be, but you do know that it can be 50,000 cash or 25,000 cash, whatever the award is. You do know that that cash is going to be available, and if you do what you said you were going to, it's real money.
The other thing too, Dylan, there's no downside to somebody applying and not being able to follow through, right?
Right. It takes maybe an hour to think about this.
Wow.
I mean, you have to talk to the businesses a couple of times. Think about this. This is available. All right, now let's sit down in 2 days and make this up. Go for it. And if they don't do it, they don't get it. But if they do it, they can do it.
Dylan, let me ask you this. Is this like Fast Track where it has to be post-performance, where they have to have the project and get it approved before actually starting on the project?
Traditionally, no. If they bought a piece of equipment last month, because this is measured by a calendar year, when they bought that equipment, again, most of the times they haven't done so. But there have been a couple of times when I talked to them and they said, well, I just bought this machine, or I just hired this person this last month. Can I count them? Well, it was in this calendar year, and yes, they were part of the counting. That's up to GoEd, and it becomes difficult to actually measure to see when that piece of equipment or that contract was bought or whatever. And so, again, historically they just said, okay, if it was done this calendar year, as long as the totals add up, the numbers add up, and you can provide documentation that way, then it counts.
Alrighty. Any other questions? I'm unmuting everyone. If you have any questions, just ask.
Oh, Justin said, how many applications are there right now? 0.
0.
I'm sure.
0.
So there's
Well,
at least
they said it was in
businesses.
February. When did you turn it off? February or March? Or they? But at one point you said in the next 2 or 3 weeks. So when are they due?
This is Linda. I would think from what Dan put up there as the piece of statute, it says that no applications will be accepted from June 1 to December 31st. So there's a pretty quick turnaround on this to get the applications in, but there's also a very good chance that the people apply. There's just not going to be the kind of competition unless every single one of you brings in 2 businesses. But I would love to have
several.
Several could.
What'd you say, Pat?
I mean, not mean that she's using talk to them.
Right.
You know, and like I said, if it's like
I don't know,
if you're a small
someone is chatting on their phone, and I can't figure out who it is.
Oh, no, we're still on mute.
Charlie asked, what's the drop dead date to get an app in? Charlie, according to the rules that we have, we can't accept applications between June 1st and December 31st. So the drop dead date would be the last day in May, May 31st, which is 2 weeks from today.
No, apparently the law says from the end of May to the, or from the 1st of June to December 31st, you can't apply.
Oh.
There's only the first half of the year you can apply. First 5 months.
But there's no specific, okay, it's open.
Anyone else have any questions?
You've got 2 weeks, it sounds like, to get your applications in.
Yep.
That is time enough to do it.
And I'll send everyone the application via email, so you have that on hand.
And again, the application is only name, address, social security number, who the principal parties are, and then what are they going to do in those 3 categories over the next 3 years. They need to sign that application, and then you submit it in to Dan, and that can be done in 2 weeks.
Certainly.
Hey, Linda, this is Marcy.
Yes.
Is it possible that you could visit with Francine and Adis with me about it? I can think of a couple, but I think we should check with Francine at the association first.
Okay, a good place to start, when Dan sends out the application, he will also send a link to this, or Dan, correct me, but can you put this link in an application so that Dan's recording this, and so there should be a way that you could sit down with them and have them run through this training to get everything that you did, and as you hear it a second time, it'll probably make sense more too. But let's start there, and then if they have any questions, they can call Dan or myself. But to be honest, Dan and I are on a learning curve, and so Delenn, we so appreciate you bringing your knowledge and experience to everybody. Would you be willing to advise for the next couple of weeks if people have questions?
Absolutely. The only question that I would have is, are we going to be able to do tourism-related businesses? If we are, I just need to know that.
Okay, we don't have a policy and procedure written for this, and so I think it would be best for us to use a similar policy and procedure that we use for rural fast track. We won't use that 110%. This will be competitive. And so if you do have a business that's only been in business 1 year, don't stop the application process, because again, it's competitive, and if everybody thinks, well, my company won't make it and doesn't help them with the application, we all lose, and we may lose this tax credit too if we don't use it. So as far as the tourism question, I would say that the counties that are eligible for tourism through the fast track, and I think Dan and Jake, don't we have on the website the counties that are eligible on the fast track, and we call it leisure and hospitality. There should be a list on the business.utah.gov website. Is that right, Dan?
Yep.
Question I got asked is funeral homes.
Looking at this application,
I said, I don't think so.
Linda,
Yes.
Glenn, number 11 on the application said,
What
is the
about all
primary
the
activity
add-on?
of your business a public utility, construction, or retail trade? If yes, do not continue. So, I mean, lodging, leisure, hospitality are generally considered retail trades. I don't necessarily agree with that, but that's how it's been in the past.
Well, the hall more.
Oh, I was going to say you can.
Well,
That application is old. And
Yeah.
that was,
Okay.
And there's
That
nothing in the code or in the rules that say that we can't do retail. If we mirror it after fast track, we have precedence. So that's something that we will have to visit with about that. So
Okay, actually, you know what, guys? I think we do need to. One thing that we haven't brought up. Delynn, disagree with me if you feel differently, but I think it should be within an established enterprise zone area. Is that by statute, or is that?
All the homes in the valley.
Yeah.
All
Yeah.
of them.
everyone, if you're not talking, please mute your phones. We're getting a lot of feedback from a few
And
phones.
do you want to go ahead and mute all of us for a minute, just so that Delynn can respond?
Sure. There we go. Wait, hold on. Let me unmute Delynn. Oh, Delynn, you're not muted.
I'm unmuted there. The enterprise zone, I would strongly urge that that they be in an enterprise zone, because that opens up the possibility of fast track and other tax credits that, if they're not accepted, they can still take advantage of, and they need to be in the enterprise zone. So that's an important thing. There should be no reason why any county does not have the enterprise zones.
Exactly. And in order to take advantage of this tax credit, the company has to be within an enterprise zone. That's in code.
That's just that it's dumb for you not to have had enterprise zones already set up. And as I remember, Kane County just simply said, "Hey, the whole county's an enterprise zone." They can do that. They can vote for that and put that into place. So that's up to your local authorities and stuff. Other questions?
Do I have any other questions? Everyone is unmuted at the moment.
Hey, it's been an hour almost.
Yeah. Something just came in from. Is that Jake or Linda?
You never know. Jake probably.
Oh, that's not. It's not a question. It's a comment. If a company is not awarded the targeted business tax credit, they still can and should take advantage of the enterprise zone tax credit.
Yes, absolutely.
Hey, can you guys hear me?
Yeah.
Yes, I can hear
Hey,
you,
Dan.
Jake.
Yeah.
Is this
I was going to say that's
the
not
actual
me.
Jake Hartman?
This is the actual Jake Carbon, and I'm in my road office. So no, I'm not typing on a computer because that would be illegal, and I do not do anything illegal, especially break the speed limit.
If there are no other questions, Linda, do we have any calendar items to discuss? Any events coming up? We've got the Governor's Energy Summit coming up. When is that? The 24th, 25th?
24th and 25th.
At the Salt Palace. Anything else that we have on our calendar that we should announce?
Just the due date for these targeted business income tax credits.
Yes. May 31st is when we need it in, because we can't accept anything after that. That is it, I guess. I'll be sending out the applications along with a link to the recording of this webinar, so everyone can get that. If there are no other questions or comments, then I guess we can adjourn for the month.
Hey, thanks, Dylan. Thanks,
Yes,
Dan.
thank you, Dylan.
See you later. Bye.
Thank you, everyone, for joining us.